Hey Money Magnet, it's so good to see you again. You ready for some price action analysis for the SPY? You are? Let's get it. I have to say though, really not the best trading of days that we've had. In my last video, I spoke about how SPY was chopping. Well, today's chop was even worse than yesterday's chop. We look at the 15-minute chart, it wasn't much to report. I mean, I had this 617 level, it cleared, and then I had a 618.2 target above, which I wrote in my Discord. 617 cleared, put in 618.2 in play, and you can see it came just shy of my target, went to 618.06 cents before pulling back. They gave us a false breakout setup of that 617 level, trapped the bulls, pushed it back down, went to hit my support at 615.5, bounced from there, but ultimately just chopped. It was very low volatility. So if you was able to come out green with today's price action, congratulations. But I tell you, there wasn't much. But I do have some good news. I do have some good news for us. Right now, we're clearly in the contraction phase where volume's getting smaller, the range of the price is getting smaller, little to no follow through. But I always say the expansion phase is coming. Now, when we look at the daily chart, we can possibly get an idea of when it is coming because we have ourselves an inside candle setup. Now, if you watch my coverage on NVDA yesterday, I kind of went a little bit in depth on the inside candle setup and how to trade it. And it's pretty much the same approach for SPY. If you look at the range of the preceding candle, that's the mother candle, 615 to 619.2 is the chop range based on this setup. So while we are in the contraction phase and it's getting pretty tough to trade with the low volatility, I believe that if we can break this range of the mother candle, 615 to 619.2, we can get a trend move, 5, 10, maybe $15 move in a direction. This is based on the inside candle setup. So right now we're at 617.5 as of recording this. I do have a support at 615.4, but I'm going to go with the mother candles low at 615. So if we're going to be bearish, both 617 and 615 must fail. That will put 613 in play, and below 613 I would be very confident in being bearish because that would be a false breakout setup based on the previous all-time high. But based on this inside candle setup, if we do not break down the support and we manage to clear that 619.2 level as a resistance, there's a great chance we are going to head up higher. Now, I do have a 620 level, but somebody asked me yesterday how to get the levels for the Fibonacci. I have certain Fibonacci levels like the 1.382 fib level, the 1.786 fib level. They mentioned they didn't have these levels. So this Fibonacci is a tool that you can get from TradingView. Right here, you can just pick it, have a menu, you pick fib retracement, and then you get something like this. You pick your high, you bring it down to the low of your choice, and then you'll get your fib extension. Now, if you want more extensions, what you can do is click on the fib extensions, and you'll see this symbol right here. It looks like a stop sign with a circle in the middle. That's the settings button. You hit settings, and then you go to styles, okay? There's coordinates, visibility, and then there's style. And then from style, you can pick which Fibonacci retracement you want to see show up. We have the 100%, we have the 61.8, we have the 0.382, we have the 50%. And of course, if you want more than the 200%, we have 200% here. You can add the 2.236, which will give you another level. You can add the 2.5. And then from there, you would get more levels to the upside. So if we use these fib extension levels that I just added, which is all based on math, we clear 619.2, we should head up to 620, and then there's a fib level at 621.34, and then there's a 624.8 level. So based on this inside candle, remember, we need the break of the range to enter the trend phase, exit the contraction phase and enter the trend phase. We need to break 615 to 619.2 range. Above 619.2, we're gonna be going calls, maybe downside, size down, because it's a bit risky with calls right now, but breakdown of 615 definitely puts, and it's a lot less risky with puts. But we cannot just jump in, we have to wait for the proper setup. Now, if we move on to triple Q, while SPY is giving us the inside candle setup, which can go either way, triple Q is showing us a bit more of direction. Now, we had a doji candle yesterday, and as usual, when we have a doji, I like to watch the range. Triple Q broke down the range, and it's looking a bit bearish to me. It gapped down, broke down the low of the doji, and it continued downwards. It closed just below my 547 level, but it's above it now. And I tell you, tomorrow, if 547 547 and 545 fails, I am bearish on triple Q. So below 547 and 545, I am bearish on triple Q. I would look to short 541.5, 540 or lower incoming. If we are to get a bounce, 547 must hold that support, 548.8 and 550 are my next resistant. Those levels were lost today. They must be recaptured tomorrow to put 552 or higher back in play. Above 552, we can get new all-time highs. That's if we get a bounce. But I will say it does look bearish, and bearish follow through would be to break down 547 and 545. But if we don't get mad. Remember, just follow the price action and the money will follow you. Here is Tesla. Now Tesla also definitely looks bearish. Triple Q looks a bit bearish, but Tesla definitely looks bearish. We lost that 320.5 level yesterday. Amazing gap down. Ended up with a doji at the end of the day. Couldn't recapture or avoid the breakdown of this green trend line though. That is technically a false breakdown setup. Now the resistance I'd like for you to watch is at 301 and 303. If we are to get a bounce, either we clear it traditionally or a gap up above 301 and 303, that would be a sign of bullishness. Maybe we can get a bounce up to 308, 309.3, which is a fib level, and then 311 or higher. Gaps all the way up at 318. But if we are to remain bearish and not get a bounce, the support level that I need to see is fail is 299, 297, and 295.5, which is a fib level, and then 294. If those levels fail, that is bearish continuation. We are heading down a lot lower. NVDA, now check it out. This is looking bearish to me. Here's why. We spoke about the inside candle setup on SPY. Well, here's an inside candle setup playing out now, because yesterday we had the inside candle setup. Last Friday was the mother candle. Yesterday was the child candle. You can see today it broke down the low of the mother candle. Beautiful. Mother candle's low was at 155.2-ish. So as long as below 155, I am bearish on NVDA. Now, bearish follow through would be to take out the previous high at 153. That was the previous all-time high. So now that we got the breakdown of the inside candle setup, losing 153 tomorrow, 151.5 and 150 would be bearish follow through. Those levels fail, you either hold on to your puts or you get into some puts. Now this bearishness would be invalidated only if we can stay above 153 and 155 recaptures. If 155 recaptures, that invalidates the breakdown of the mother candle and the child candle, the inside candle setup. That will invalidate that breakdown, and it would be bullish again above 155 with the false breakdown setup, and we'll likely head back up to all-time highs. So we know the multiple case scenarios that can potentially happen. It's our job to be prepared for anything. Now here is coin. Now as you can see here, you see how we had those bounces from last Friday and Monday, even had some buying pressure from last Wednesday. That was a buy zone, and you can see how today's candle that the buy zone is turning to a sell zone. That's bearish. We also broke down the 338.3 level. That was a fib level. Broke that down. We're in breakdown mode. So coin is looking bearish to me as of right now. Next support I have is at 333, 330, and 328. If those levels fail, much more downside is incoming. Now if we are to turn this around and get a bounce, then the lost level must be recaptured as usual. Right now I have resistance at 337 and 338.3. If those levels can recapture, it would invalidate today's breakdown and put us possibly sending us back to the 345 to the 350 area. And of course, above 350, I would definitely be bullish again on coin. And last but not least, here's the VIX. It is just consolidating. Not much going on. 16 down to 17 is my chop ring. Above 17, I would be bullish, and below 16, I would be bearish. We're gonna keep it simple, just like that. So thank you once again for being here. That really means a lot that you're here. You know, I know it's probably hot right now. It's probably really hot. Hopefully you guys are staying cool and with your AC on and you're really comfortable, because I'm telling you, gotta stay cool in this heat, and we gotta stay cool while we are trading. Right? All right. Thank you. Peace.